The latest economic forecast from the British Chambers of Commerce found that the budget will do little to kickstart the UK economy and that medium-term growth will remain subdued. The BCC says the government should maximize the AI rollout and seize global trading opportunities in order to lift the economy out of its low growth cycle. So a lot to digest here in terms of what's happening with the UK economy. Ritika is joining us now with more. Just break it down for us ultimately. With so much going on, a lot of question marks about what's going to happen now that we have the budget. Where is the growth going to come from, Ritika?
Yeah, Sylvia, a great question. And the BCC have come out with their own economic forecast that you've outlined there, that saying that the budget is unlikely to be a growth changer for the UK. The OBR has said something similar. Not on the whole such surprising analysis when you consider one of the criticisms of the budget is that there's been a lack of big pro-growth policies, which is ironic in a way for a Chancellor, Rachel Reeves, who has really positioned herself as a Chancellor that is very pro-growth. And that is one of the big issues really here for the UK. There was a lot made of that stat that the tax burden rising to its highest since World War II, 38% of GDP. But arguably the biggest issue really facing the UK is the slow growth, the productivity that has just been weak. Now, if we start off with the good news, I guess, for the budget is, of course, she was able to nearly double that headroom, nearly £22 billion. She stuck to her fiscal walls. There were some disinflationary measures in there when it came to rail price freezes, lower energy bills. But beyond that, it's hard to be a whole lot more optimistic. If we look at those BCC forecasts, growth lower in 2026, down to 1.2%. Business investment significantly lower, 2026 0.9%, unemployment to rise further, and exports to fall in 2026 as well. And the BCC, of course, as you mentioned in the intro there, saying that they should focus on AI and some other pro-growth policies as well, Sylvia.
A couple of suggestions there for the government, but let's broaden out the conversation. We have Vicky Pryce, chair of the BCC's Economic Advisory Council, joining us this morning. Of course, Ritika is also staying for the conversation. Vicky, I'll just get started by asking you really to outline the reasons behind the fact that you don't think this budget will actually deliver on further growth for the UK economy.
I think it has just been said, there was very little in the budget which was directly aimed at encouraging particularly the private sector to go out and hire and invest. And I think that's the thing that worries us. A lot of the growth that we're going to be seeing in the next few years, and actually the growth that we've seen so far in the UK, has come mainly from government spending, which has been going into improving the National Health Service and other public services, increasing wages for public servants as well. And very little on extra investment and growth. Yes, we saw some investment being allocated in last year's budget, but overall the measures, if you add last year's and this year's together, have not been particularly helpful for business, especially the increase in national insurance contributions, which is a real tax on companies, which took into effect last year. And that, of course, is impacting companies' willingness because the cost of labor has gone up to hire and also to invest.
So bottom line, you'd have liked to see a little bit more clarity from the government's plans in terms of to boost growth. But looking at the forecasts published by the BCC, GDP growth now expected to be 1.4% this year. That's a slight increase from what you had previously. In terms of 2026 and 2027, no changes here, but you are estimating a GDP level of 1.2 and 1.5% respectively. So ultimately, there also seems to be a couple of green shoots in the UK economy. Where would you say those are at this stage?
Well, what we'll wait and see whether it happens, of course, is whether business investment really does sort of continue to grow. We've seen quite good investment this year in 2025. Our worry is that we could see a slowdown next year. So although there was a bit of a green shoot, if you like, over the last 12 months, we've seen that, in fact, slowing down. And certainly we do expect that to be the case. So we expect business investment to grow by only 0.9% next year. And that's the worry. In terms of the green shoots that could become a little bit more permanent, what we are hoping is that some of those measures that were in the budget, which help inflation slow down. So there have been a number, again, as you suggested earlier, of freezes, of rail fares. There's been taking away of green levies in household electricity bills. So it's a combination of factors which might be reducing the inflation forecast faster than had been anticipated. We are expecting the Bank of England to cut interest rates as a result. So I think what Rachel Reeves, the Chancellor, is hoping for is that there will be some growth coming that way, that both households and businesses are going to find that with interest rates lower, they can actually afford some of the plans that they had a little bit more easily in the future. For the moment, we're not seeing anything very much going on there because everyone's just waiting. Both households, consumers, confidence itself is quite low, and businesses are just waiting to see whether that's going to happen.
But Vicky, even with, as you outlined, that interest rates coming lower, it seems like businesses and consumers still reluctant to spend. We have a very high savings ratio here in the UK, and growth and productivity really being the key challenge in the UK. Can you outline some of the structural constraints here that you think may be dragging the UK down, and what more the government should be doing?
I think one of the problems is the one that highlighted, which is investment. There hasn't been sufficient investment in the UK, both from the public and the private sector. If you put it all together as a percentage of GDP, fixed investment is considerably lower than all the G7 countries, which is an issue that has kept productivity low for quite some time. We haven't recovered, which is also what the Office for Budget Responsibility that produces this forecast for the UK has said. We haven't recovered from what happened after the financial crisis, where we had austerity, very low productivity growth. And then, of course, we had Brexit, which affected the UK negatively. Then we had COVID. Other countries have suffered those later crises as well. But we seem to have carried on this low productivity period a lot longer than others. And so the OBR has decided in its own look at analysing the long-term trend in productivity, that actually this has now become a more permanent issue in the UK, not just a temporary issue, which means really lower growth in the future. And with that, of course, for Rachel Reeves and the budget come also lower revenues. It's one of the reasons why there have been more tax increases in this budget, as there were last year, to cover what the government needs in terms of having a headroom which satisfies the capital markets.
And Vicky, I'm curious as to, in some of the comments that I was reading from the BCC, they're talking about maximising the AI rollout, of course, a big issue here right now. Can you expand on those opportunities when it's from the AI rollout to seizing global trading opportunities?
Yes, I mean, one part of the AI picture has to do with the private sector and the other one with the public sector. What is going on right now, of course, is the productivity in the public sector is suffering because we do need absolutely to modernize. A lot of money is going in, a lot of people employed in it. And of course, there are repercussions of spending in the public sector on the private sector as well. So that's the one thing to remember. On the private side, there is no doubt that what we're seeing is that a lot of the benefits of AI seem to be going to just a few big firms. The smaller firms that we do absolutely need to engage and also export a lot more tend to just use AI to just cut down on costs and cut down on labor. What you absolutely need is to get that AI use spread across in such a way that improves productivity in the economy as a whole, and not just in some sectors which perhaps will be able to export more, but at the expense, if you like, of competition from the smaller players. And I think we do need that, and we do need that program to become really entrenched in the economy. I think the private sector has a big role to play, but the government needs to help as well.